How do I avoid taxes with a self-directed IRA? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. When you use a self-directed IRA to make investments, the primary advantage of doing so is so that all the income and gains will be tax-free or tax-deferred, meaning your income and gains from your self-directed IRA investment go back to the IRA without tax. You only pay tax when you pull the money out. However, if you have a Roth IRA and you're over the age of 59 and a half and the Roth's been open at least 5 years, then everything you take out of the Roth IRA is tax-free. So what's the only way that you're going to pay taxes on a self-directed IRA investment? Well, it's a 4-letter ugly word called UBIT, unrelated business income tax, also known as unrelated business taxable income. And that is the only tax that's imposed on IRAs. And actually, it was conceived and put in the tax code all the way back in the 1950s to target charities. Congress did not want businesses like McDonald's running their business through a charity and never paying taxes. So they set up this regime that can be found in section 512, 513, 514 of the Internal Revenue Code. It basically says this: if you're a charity and you have an unrelated business, meaning you're a hospital and you have a gift shop or a parking lot, you're going to pay business tax or trust tax rates, which are currently 37% on that income. Now, you're saying, well, an IRA is not a charity. Well, it's taxed as one. It's a 501 trust. That means that when an IRA or 401k does the following 3 things, it could trigger this UBIT tax just like a charity. 1, life insurance. If an IRA buys life insurance, it could trigger, well, it won't trigger UBIT, you just can't do it. But I would say number 1 is margin to buy stock. So if your IRA or 401k uses margin to buy stock, that can trigger UBIT, leverage. Number 2, if your IRA uses leverage to buy real estate, a non-recourse loan to buy real estate, it could trigger this UBIT. There's an exemption under tax code section 514C9 for 401ks who can use a non-recourse leverage loan to buy real estate without triggering UBIT. Thirdly, if your IRA or 401k invests in an active trader business like a restaurant through a pass-through entity like an LLC or partnership, the net income above $1,000 will be subject to UBIT. C Corps, if your IRA owns Tesla or Apple, or 99% of all publicly traded companies are C Corps, that will block the application of UBIT and there will be no tax on the dividends or gains from your Tesla or Apple or any corporation investment. So thus, to recap, self-directed IRA investments, the income flows back tax deferred. Self-directed Roth IRA investments, tax-free so long as it's open 5 years and you're over the age of 59 and a half. 3 ways to trigger this UBIT, this ugly 4-letter word tax. Use margin to buy stock in an IRA or 401k, non-recourse loan to buy real estate in an IRA, exemption for 401k. Thirdly, invest in an active trader business like a restaurant in an IRA or 401k through a pass-through income. If in all 3 instances there's more than $1,000 in net income, you file a 990T and you pay tax, or your IRA pays tax on the net income from the IRA investment.